Ladies and gentlemen, good day and welcome to the IG Petrochemicals Limited Q2 FY23 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pramod Bhandari, IG Petrochemicals Limited. Thank you, and over to you, sir.
Thank you. Good evening, friends. Good evening, everyone. On the behalf of IG Petrochemicals Limited, I extend a warm welcome for joining us on the call today. On this call, we are joined by the SG, or Investor Relation Advisor. I hope everyone had an opportunity to go through the financial results and investor presentations, which has been uploaded on the stock exchange and our company's website. To begin with, I will give you a quick overview of the recent development in the chemical industry, followed by the operational and financial performance of IG Petrochemicals. Over the last few years, many global MNCs are pondering their thoughts and are deliberating looking for alternative suppliers. India manufactures more than 80,000 types of the chemical, right from bulk to niche, and hold a competitive edge in the world on the back of growing domestic demand, business-friendly industrial policy, demographic advantage. India has all the major raw material required for the manufacturing various types of chemicals. Indian manufacturers are well equipped with the required technology, infrastructure, skilled workforce, and logistic connectivity, and now willing to invest more to tap the growth opportunity available. This further enhances the growth visibility for the Indian entire chemical sector. Industry has outperformed considerably over the last few years and has a strong potential to grow further in the future. Phthalic anhydride, the company's main business revolves around the phthalic anhydride, a downstream product of the orthoxylene, which in turn is converted into phthalic, and it is also a third derivative of the crude. From crude, it goes into the light naphtha, and naphtha to the xylene, and xylene to the orthoxylene, and then it's phthalic anhydride. It is a versatile intermediate in organic chemistry for the production of plasticizer, unsaturated polymer resin, alkyd resin, paints, CBC pigment, which are broadly serving 20+ end industries. Consumption of paint and its derivatives are growing rapidly over the last few years. Earlier, the consumption of phthalic anhydride was highly concentrated to the paint, plasticizer, and CBC industry. It has changed significantly. Many more industries have increased the application of PAN. PAN is now being used in the production of specialty chemical, agrochemical, specialized polymers, electronic products, insect repellents, UPR. It is also being indigenously used for the making of plastic currency, paper board, laser boards, sale of windmills. The industry is primarily served by the very few players, not only in India but also globally. IGPL is the largest producer of phthalic in India and enjoys a cost leadership driven by the highly integrated and technology-driven state-of-art production facilities at Taloja. The company has fully integrated manufacturing facility of phthalic anhydride, malic anhydride, benzoic acid, and DEP, which has been added recently at Taloja. We manufacture PAN product at a high scale with a capacity of 222,000 metric ton per year. This capacity is managed by a highly skilled manpower and with high quality control check. Malic anhydride and benzoic acid are the key products created by the wash water by producing the PAN phthalic anhydride. The cost of producing these products are insignificant, and the expansion of DEP in the downstream commenced in FY22 with a total capacity of 8,400 ton per annum. This vertical has also started to show the contribution meaningfully to our total business. It is worth to note that the non-phthalic business has been growing steadily and currently hold around 8 to 8.5% of the total revenue. On the export front, our business has presence primarily in the Middle East market and currently contributing around 10 to 12%. In terms of the expansion, the IGPL has embarked a few growth plans, keeping in view the growth demand of the downstream derivatives. The expansion plan of DEP has been a thrust of the company growth trajectory and same will be manifest in coming years. As stated earlier, the brownfield expansion of phthalic facility at the similar location at our existing location is on track and expected to complete before March 2024. In fact, we will start the commercial production before March 2024. Management team are also assessing a couple of projects. Most of them are downstream products. We will announce more detail whenever it is finalized and approved by the board. Our team has done an impeccable job with respect to the operational excellence at site. 8 out of 10 quarters, we are continuously generating the 50 crore plus profitability. In Q2 FY23, we have continued to maintain our growth momentum for the quarter on the back of growing demand of the phthalic anhydride and its derivatives. For the quarter ended Q2 FY23, the total revenue stood at around 575 crore, a growth of 21% year-to-year basis. EBITDA was around 91 crore with a margin of around 16%. The margin was slightly lower compared to the previous quarter, mainly because of the lower quantity of phthalic and lower realization of the malic anhydride, which has actually gone down substantially compared to the last quarter. On the half year ended, the total revenue for the first half was 1,239 crore, a growth of 44% on year-to-year basis based on the higher volume and the good domestic and international demand. EBITDA for first half of 23 stood at 215 crore, a growth of 16% on year-to-year basis. Operating margin stood at around 17%. Profit after tax stood at 137 crore, a growth of 16%. And as on September, the company is net debt free, net debt zero company. Operating efficiency combined with the positive cash flow from operations put us in a very comfortable position to explore the various downstream derivatives market. In order to broaden our product portfolio, we are continuing to explore the opportunity in downstream and specialty product segment. Over mid to long term, Indian government continued to underscore the necessity of public investment in infrastructure. We believe the demand for our product portfolio will remain robust for coming period. Long-term vision is to have well-diversified chemical company with a leadership position in our phthalic business. We'll diversify our product portfolio and expected to achieve a 30% of total revenue by March 2025 of non-phthalic products. With this, we will open the floor for questions and answers. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Nirav Jamodia from Annual Research. Please go ahead.
Yeah, good evening, team. So I have 2-3 questions to ask. So first on the phthalic situation in India. So if you can give your thoughts in terms of how the demand has been in Q2 in terms of the imports, because last when we interacted, you mentioned that Indian demand for phthalic is around 430,000 tons, and monthly imports were like around 6,000 to 7,000 tons, which were coming to India. So if you can just touch upon that aspect first, and given the current macro situation, what we have been facing in terms of the Europe problems, had the demand of phthalic impacted in India or elsewhere globally?
So in India, we continue to have a demand of around 430,000 to 450,000 tons, which continue to be there. In the last quarter also, we have seen the similar type of demand. India continued to import around 6,000 to 8,000 tons per month, which is continuing. I think the last quarter also we have imported around 26,000 tons. However, we are seeing some pockets of the pain. We are supplying to all the industries of chemicals. There are some pockets like basically the pigments and all that, where the end users are supplying it to Europe and other markets, where we are seeing some pain in terms of the demand, because generally they are not able to sell their product to the European market, which essentially use it and then refurbish it and convert it into other product and selling. Because I think there is a challenge of the inflation, there is a challenge of the energy supply at Europe. The cost is very high. in some pocket, I think we have seen some moderation in the demand, which we believe now generally it is happening in the Deepavali month also, because a lot of guys are on leave. Then we expect that to uptick to come in the second half of the November to December. So slightly there is a moderation in demand because of the geopolitical issue and generally the holidays in the domestic market.
Correct. And sir, you touched upon on Malik also, like Malik realizations have fallen sequentially in Q2. So when we last interacted in Q1 conference call, you mentioned that out of the 48 crores of revenue, what non-Thelic business has done, Malik was around 27 crores. So I think this quarter also non-Thelic revenue is 45 to 46 crores. So if you can let us know what was the Malik sales this quarter, and individually if you can break it down.
Basically, So basically the actual realization from Malik, although quantity remains same, but the realization has gone down from 27 crore to 19 crore. So basically the realization has gone down from 150 to around 92 to 95, because Malik has gone. For us, the advantage is whatever is the sales in the Malik is directly converted to our EBITDA.
Correct.
But for other players who are actually doing it for end-butane road, it's a loss-making proposition.
Correct.
So it has impacted 8 to 9 crore of the revenue realization has lowered in the Malik, which directly translated to EBITDA. However, it has been covered by the DP, which was around 13 to 14 crore, has gone up to 18 to 19 crore. So overall, it's around 530 crore of the revenue from Thelic. Malik, benzoic acid and DP is around 40 crore, and 7 crore is from the other income like interest and the dividends and all.
Correct. So now are we operating our DEP plant fully at around 8,400 tons, or still there?
No, we are operating right now at 60%, around 58 to 60%, and we expect to achieve in next 6 months around 90 to 95%.
Correct. Sir, last question from my side is our Thelic capacity is around 222,000 tons, but because we need to change catalyst every quarter, which you rightly explained last time, what could be the maximum capacity utilization we could achieve in a given year, given that we need to change the catalyst every quarter, which you have explained rightly last quarter?
We actually change the catalyst every year, not quarter.
Sorry.
But
my mistake.
having said that, the 4th plant is there. In a particular year, we need to change the catalyst twice. For any block of 3 years, in 1 year we need to do it. So basically, every year it's a given we will change the catalyst once in a year, which is around 30 to 35 days. In a particular year, it may be twice. So generally, after considering that, we are at a capacity utilization of around 90%. So if we are able to do twice in a particular year of block of 3, it may be 86-87% for that particular year.
Got it. And sir, have we done any catalyst change in second quarter, because our other expenditures have gone up this quarter? So
yeah. So there is no change in the catalyst. It's basically the energy cost of the fuel oil and the which we are using for the purpose of heating. And generally it is high in the raining season, because the last quarter was the full of raining season. So that has contributed, and we also provided around 2 to 2.5 crore for the CSR expenditure, which you need to provide as a part of overall expenditure. Because our liability for CSR is around 4 crore per year. So as a prudent practice, we have decided to provide for in the 6 months, 2 crores.
Got it. Sir, small clarification before I join back in the queue. So have we done any catalyst change in the first half, or are we planning to do any catalyst change in?
We have done it in April, May, June for one plant. Okay. And for last quarter, we have not done any change in catalyst.
Okay. So are we planning to do in second half any of, because you mentioned that...
I think we may plan, but right now it has not been decided. It may spill over to next year also, or maybe the last quarter of this year.
Got it, sir. Thank you, and all the best. I'll join back in the queue, sir. Again.
Thank you.
Thank you. We'll move on to the next question. That is in the line of Aditya Khetan from SMIFS Limited Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, on quarter-on-quarter basis, there is a decline of 14% in top line. If you can quantify how much was it from the volumes and how much was it from the realization?
So actually, it's 4 to 5% on account of volume, around 4 to 5% on account of low realization of the Malik, and balance is the pricing of Thelic.
Sir, volumes was how much, sir, you said?
4% on account of the volume, and around 4 to 4.5%, around 9 crore rupee, is on account of the low realization of malic, and balance is the pricing of phthalic.
Okay. Okay. And sir, the lower volumes is primarily because of decline in demand in some of the sectors, or like what was the reason for decline?
Not exactly. It's a demand. Actually, the order was booked, but because of some logistic issue, we are not able to supply at the end of September. So inventory, if you look at September, generally our inventory is 1 or 2,000 ton. In September, it was around 6 to 6,500 ton.
Okay. Okay. And sir, you mentioned about
lower, yeah.
onto the other expenses, you mentioned about the rise into the power cost, but it seems like the power cost is going down. Like we compare it on a
No. You don't compare power. You need to look at the energy cost. Power is only the power. We hardly use any power because power is used only when we take the shutdown, and it is on a standby basis. We use the internal steam for the purpose of generating power, and we use the fuel oil for the purpose in the raining season. So you look at energy cost, where you will be able to see that around 4 crore rupees higher.
Around 4 crore rupees higher.
3 to 4 crore, which is generally the case in the raining season. It's always, all raining season have a similar cost structure.
Okay, so we can take the last quarter run rate as the normal for the coming quarter, like 40 crore?
Correct.
Okay. Sir, onto the orthoxylene prices, so you might be noticing that there is a sharp uptrend into the prices of orthoxylene, which has actually squeezed down the spread of PAN and OX. I believe, sir, you had mentioned that so there is some temporary shutdown which has been taken by Reliance, due to which there was a temporary crunch into the market of orthoxylene. So has this situation been normalized, or
Yeah.
what is the current situation?
It has been normalized now. Now we are getting the regular supply. And of course, the margin compared to the last quarter, 200, 250 has slightly moderated because of the issues, geopolitical issues in the Europe. Because end industries, there are pockets of the industries which are supplying it to the China or the European side. That has impacted. So from their side, there is a slightly moderation in demand.
Okay, but the spreads have come down as compared to like quarter on quarter.
Compared to the previous quarter, Q1, Q2 spread has slightly gone down.
Okay. So, but they are at par with the normal range of $250 per ton as well. What guidance?
Right now range is around 150 to 200 compared to earlier it was 200 to 240. But
okay, so 150 to $200 per ton.
It's moving between 150 to 250 for last 6 months.
Okay. And onto the DEP front, sir, can you provide the top line figure as you have provided for the last quarter?
I think it's given in the presentation. It's 17 to 18 crore around.
17 to 18 crore.
17 or 18 crore per quarter for the quarter.
And sir, just,
I think if you look at the presentation, we have already provided that.
Sure.
Yeah.
So just one last question. Sir, by FY25, we are planning some sort of 30% of the non-phthalic business. But considering now we are expanding into PAN only, that would come by FY24. So do you think this 30% target would be achieved? So can be achievable? So considering as on date also we are at around 8 to 9% only. So
it is easily achievable, provided we are implementing the project what we are planning for. But right now we can't discuss this because it is still to be approved by the board.
Okay, but so we are confident, so we can take that to around 30%.
By that is the target we have set it for us. It may be higher than that, it may be slightly lower than that, but we are completely focused to take our revenue from other products around 20 to 25% of the total revenue.
Oh. Okay, sir.
And long-term target is to achieve 50%.
Long-term target is to take to 50%.
Yeah.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Good evening, sir. I have few questions. My first question is it possible to know how much top 5 and 10 customers contribute to the sales?
I don't have it readily available, but I can give you industry-wise. The paint plasticizer contribute around 40 to 45%. Pigment, PVC are around 10 to 15%, and then 30% is the specialty chemical, agrochemical, UPR and others.
No, sir, that you are saying sector-wise. I was asking from the customers, so that you don't have off the hand.
Yeah, I don't have off the hand.
No problem. Sir, my next question is regarding this sector contribution. How was the contribution from paints, pigments, plasticizers, let's say 5 years back? And now that, the other segments are also started taking our phthalic anhydride, how does it look 5 years down the line? Anything you have an idea?
So today, basically earlier historically, it is plain plasticizers were the main contributors. Now it has moved to the historical guys has moved to around 60 to 65%. Now the specialty chemicals, because a lot of Indian companies are going into the downstream specialty chemicals, agrochemical, UPR, that is the new segment. In fact, there are a couple of new segments are also entering into, like specialty films, or somebody is also producing some engineered plastic which is used for the Boeings. So there are a lot of new segments are coming up. Like now India is getting into a full revamp in the infrastructure with the trains and all that. We will see a lot of demand in the polymer side also coming up in the future.
Okay. No, sir, like you said, let's say 5 years back, if paints and plasticizers were contributing 90% to the sales, now it has come down to
60, now it is 40.
Now 40. So how will it look, let's say, 5 years down, will it come to, let's say, 30%?
Not exactly, because a lot of guys in the paint are also setting up the big capacity. You heard that Asian Paint is also expanding and new players are also entering into like Indigo Paint, JSW Paint and Graphene probably next 1 or 2 years. They are setting up the plant equivalent to Asian Paint. So paints continue to grow because they are expanding and India continue to have a good demand around 10% plus growth. New segments are added. It's like similar way. You are saying the growth in the electric vehicle vis-a-vis the petrol and diesel. Petrol and diesel are continue to grow. Electric vehicles keep on adding, but overall percentage-wise they will remain small.
So you mean to say the contribution from the erstwhile segments will continue to, hover around 30% or 30 to 40%?
Correct. However, you need to see that how India shape up in terms of their infrastructure. If India decided to change the entire infrastructure of underground, where we use the water-based pipeline, which is corroded around 40, 50 years old pipeline. If India decided to change to UPR, if India decided to change to FRP-based polymers for the purpose of all the new metros and all build up, then you see a very good demand in that side. So that is the way you can change it in a quantum jump rather than in percentage.
Okay, fair enough. So this UPR, like I think you had mentioned for paints, only 2.5% is used. This phthalic anhydride. How much is used for UPR, sir? Any data you have?
UPR, it depends upon the various polymers between around 25 to 35%.
So that means in a 1 kg, this one, so this will be around 0.3 kg. That's what you are saying.
0.2 to 0.3, it depends upon what type of polymer you are making.
I agree. But whereas in the paint, it is only 2.5%, correct, no?
Paint 2.5, plasticizer 35 to 55%, and polymers around 20 to 40%. Depends upon what type of you are making.
Polymers, how much you said, sir?
20 to 40%.
20 to 40%. Okay. So my next question is, so we are supplying to so many different sectors. Is the margins are same across the sectors, or it maybe differs from one customer to another?
Not exactly. It's a segment-wise, it's almost same.
Segment-wise, sector-wise, it's almost the same.
Yeah.
Okay. Sir, my next question is about the capex, the PFI. Sir, my first question is, regarding the capex amount. Like we are spending around 350 crores to put up a 53,000 brownfield capacity. See, compared to PA4, where we have spent around 320 to 330 crores, so this looks okay because of the increase in the other materials. But our competitor is putting up this 90,000, metric ton capacity greenfield one at around 650 to 700 crores. So, see, you had mentioned earlier the technology, the reactors are all more or less the same. So, why there is so much, increase in cost of the capex for us compared to them?
So I will not be able to comment what competitor is saying, because if IG is setting up a new plant of Thelic of say 53,000 tons in a greenfield, it costs 600 to 650 crore. So we are setting up at 350 crore. That means it is 200 crore lower, because we don't need land. All power, steam, utilities are already available. So entire infrastructure is available. That's why our cost is 350 crore. If somebody else is able to set up, we have all equipment, technology, catalyst, everything is German.
Okay.
We don't compromise our cost, which we have mentioned 350 crore is the best available cost. With the same technology equipment is set up any other place, it costs 600 crore plus.
Okay, fair enough. Sir, another question about the capex only. See, this we had announced exactly in Q2 FY22, putting up this PA5 project. And we are taking more than 2.5 years to commission this brownfield. So they are saying a greenfield one they will be putting up within 3 years. So why we are taking more time to put up this plant?
It's not. We are taking 24 to 30 months, and when we are saying March 24, which is end of 30 months, that is the last date. We will be able to start much before that, maybe 1 or 2 months or 3 months. And when we are talking about the setting up of the brownfield expansion, it's not about the capacity to execute. You can set up that entire plant in 6 to 9 months. It's always about the long lead item, how much time it will take to come from the day you order. So that is the reason. Our timeline, when we have mentioned 24 to 30 months, is the best period available.
Okay. Sir, my next question is about the EBITDA margins. See, if you see...
Interrupt, Mr. Jain. May we request that you return to the question queue?
Sure. Yeah, thank you.
Thank you. The next question is from the line of Pawan Nahar, an individual investor. Please go ahead.
Yes, thank you. So my first question is, as we see things in November, 40 days have gone for this quarter. What do you think, what is your best guess for spread compared to Q2?
I think spread is still moving around $150 to $200. So it is not ideally comparable with the Q1 and Q2, because it all depend upon. You can always talk about Thelic, because the Malic price has gone down actually. Thelic almost remains the same level, but Malic has gone down from 150 rupee to below 100 rupee. So it's a combination of all. We are making good margin in the DP, because DP is still at 127, 128 rupee compared to Thelic, which is 110. DP is 127. So it's a combination of all you need to see. It's not in absolute term you can decide only with the Thelic margin how much money we are generating.
Yes, sorry, if I've understood right, you are saying, if you correctly, Thelic is broadly the same in terms of spread. It's Malic which has dropped. Is that understanding?
Yes, Malic has dropped by 35%, from 150 to below 100.
Okay.
But for us, the advantage of the Malic is there is no raw material which is involved. So whatever is the sale is directly translated to EBITDA. So compared to the last quarter, which was 27 crore, for the same quantity, we have around 18 to 19 crore for this quarter.
Second question, what I wanted to ask was, Malic can also be made by the alternate route, which is
correct,
gas, right?
And butane, correct.
Yeah. So of the global Malic consumption or production, how much would be that route? Gas?
I think 96 to 97% is on butane route.
Okay. I was thinking actually that, gas prices have gone up so much. Yeah. So logically, there may have been some shutdowns, some production impacted from the alternate route, and you all would have gained. Yeah. But somehow I see that the assumption was wrong. Can you please?
Actually, what happened is there was a scarcity of Malic between 21 to 22. And Malic price gone from 110 to 300 rupees. Now again it has come back to 110. So it has gone to 2 to 3 times during the period when it was a scarcity of Malic. There was shutdown of plant, there were logistic issues. Now a lot of plants has come back. So Malic price has actually moderated. Generally, if you look at the history, Malic is generally available at 600 to 800 rupee over and above the N-butane price. So it has gone to $1,000 over and above butane price, again corrected to now 600 to 650. However, because you are using N-butane, then it is very difficult to make the money at the current prices. But for IG, that is not a restriction.
I understand. That's why
we are manufacturing malic because it's an opportunity available with us from the wash water of Thali.
I understand.
Correct way to manufacture the malic is the N-butane route.
Okay. And would we consider setting up a malic plant somewhere where gas is available for cheap?
We are evaluating the opportunity right now under discussion. So it will not be correct for me to comment at that juncture. I think once we finalize that, it will automatically be in public domain.
So on that same line, I mean, not about you. Generally, what would be the cost of setting up a 40,000 ton malic anhydride unit?
40 is not available. Generally, it's 50 or 60,000 ton.
Okay, so let's say 50 or 60. What should be the cost?
It depends upon the location. It ranges between 1,000 crore to 2,000 crore, depend on the location where you are setting up.
1,000 to 2,000.
Yeah.
So we have to assume it has to be in the USA because your gas costs there will be more competitive. So what would the cost?
Not exactly, because US gas is competitive, but there is a big issue in terms of environment and the logistics. So it's all depend upon where you are setting up. In Middle East, you can set up at 1,500-1,600 crore. In India, you can set up at 1,000 to 1,200 crore, but gas is not available. In US, gas is available, but the environment and other operating cost is high. So you need to evaluate plus and minus from all the locations and then decide. And ultimately, you need to be near to the raw material source or customer.
True. Okay. The other question is, I'm looking at your 15-year plus history. Okay.
Yeah.
And what I see is that the business profile before up to FY16, so 2007 to 16, was pretty, I would say not good, and rightly so. You were struggling to expand, or you did not expand. From FY17 to till date, right, there is a significant improvement where, basically, on an average, for every 100 rupees of capex, you are making 25 rupees of EBITDA, right?
Correct. Yes.
That happened, one is that after FY17, it is just not the COVID impact that I see in the business. Something has happened from FY17. And the second thing is that your competitor, which is, on a standalone basis, so excluding the malic unit overseas, has always been almost every year, more capital efficient than you. I understand that there is, we've done a German machine, right, which may have a longer life. So my question is twofold. One is that what is that change after FY17, which has driven, this kind of a payback, if I may use the word, and is it how sustainable you think it is?
So I understand your question. There are two things which change after 2017. Yeah. So when you are operating at below 1 lakh capacity, you are not able to get the operating efficiency and yield advantage. So once you cross 1 lakh, which we have effectively done in 16-17, so that is the one. Once you cross 1 lakh, 150, say 160 or 220, the operating efficiency is gone up. Second is your fixed cost, which is now divided earlier in 2 plants, now it's a 4 plant. Second. Third, malic unit is acquired by IG in 2017. So typically when we were making malic around 1,500 ton, now it has to around 7,000, 8,000 ton. So that has contributed in a big way, because today if we are operating at 100 crore of malic sale, that sale directly contributed to your EBITDA. There is no raw material cost. Now if we are doing the DEP and benzoic acid, first the operating efficiency of phthalic plant, which is from 2 to 4 and from 50,000 capacity to 2,22,000, scale has changed. Second, the product malic anhydride, benzoic acid and DEP, which has contributed around 170 to 180 crore on annualized basis. That 2 parameters has, and the reduction in the overall cost, because once you operate at a scale, your overall cost is gone down. So these 3 parameters have changed the story compared to last 15 years in last 4 years.
Just please, I just want to make sure I've got it right. So what percentage, so let's leave Malik because you make it from wash water, right? What percentage of your own phthalic is used for the other acids and the products that you mentioned? Or
only for the DP, which goes around 50%.
Sorry, I'm sorry, I did not understand.
DP, which we are producing, where we use 38 to 40% of the phthalic. That's all.
So 38 to 40% of your phthalic production is consumed in a house?
No. Whatever DP we are manufacturing, in that we need 40% of phthalic.
Okay. So that is then not a significant amount as a...
That is second point. Third point, the multi-industry uses. Earlier, phthalic was limited to 2 to 3 industries. Now it is being used in more than 50 to 20 industries. As the India get into the new chemistry, specialty chemicals, agrochemicals, UPR, as India go deeper into the infrastructure building drive, you will see more and more phthalic uses will come. So the diversification in the industry also play a big role in terms of establishment of the good amount of margin.
Okay. The related question is, we are seeing in India both the players expand capacity. Anywhere else in the world are you seeing capacities being added?
I think generally there are some addition we have seen, but that is mainly from account of the debottlenecking. Otherwise, it's India which is driving the growth because India yet to build the infrastructure for next 20 to 30 years.
Okay. So are you like, are you kind of confident, or confident is a bad word to use. What is your sense in terms of the spread, let's say going ahead versus the last 5-6 years?
So my sense is India in next 7 to 8 years, it's my personal opinion, not the company opinion, will cross the demand of 1 million ton. If India need to grow their infrastructure, then the UPR, when we are building the bridges, dams, we are building the metros, and everything India need to build, every expansion in infrastructure needs phthalic. So I assume that personally that India will continue to grow between 6 to 8%, and by 2030 the demand has to be near to around 1 million ton.
Okay. One more question. How much time does it take to set up a Malik unit? Let's say your board...
24 to 30 months.
So then I'm just not able to understand how you will get your 25 or 30% or 20% of revenue.
I never told you that is because of Malik.
No, sorry. You did not. I'm trying to understand where will that... It is just...
You have to wait for some time.
You are already at FY23 end.
Yeah.
Right? So unless it is an acquisition...
Still we have 2.5 years.
Okay. Fine. And generally...
that is the vision statement we are trying to achieve this.
And generally when you make, whatever investment that you plan, what is the hurdle rate or payback duration which you...
Typically, whenever we are investing, we need to have an IRR of more than 15% and the payback period of less than 5%. That is the given for any project. However, there are some projects where you can see the long-term sustainable benefit for 40 or 50 years, or you have a monopolistic practice. In that case, payback period may go to around 6, 7 or 8 years also.
Okay. Thank you so much.
But generally, 15% and 5 years is the key.
Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Chirag Vakaria from Budrani Group. Please go ahead. Chirag, your line is in the talk mode. Please go ahead. Mr. Chirag, we are unable to hear you.
Hello. Am I audible now?
Yes, sir.
Yeah.
Okay. Yeah. So, sir, just wanted to understand from quarterly perspective, you said that Q4 is around 17 to 18 crores, right?
Sorry, can you repeat again?
Quarterly.
Yeah, we again lost you.
Sorry to interrupt, Mr. Vakaria, your audio is breaking up.
One second. Is it clear now? Hello? Is it clear?
Yes.
Yeah.
Just wanted to get from DEP perspective, the turnover was 17 to 18 crore for the quarter?
Correct. 18 crore.
Okay. So, what are the margins on this in terms of EBITDA margins? What are the margins here in DEP?
DP is actually making around 12 to 13% on gross level and net level around 5 to 6%. But this is over and above Thelic.
In terms of sir, number for 17 crore, what would be the EBITDA, sir? Roughly, if you can share it.
12 to 13% is the gross margin, because in DEP the EBITDA is PAT.
Okay.
So the gross margin at the product level is around 11 to 12%, and net margin is around 5 to 6%.
5 to 6%. Okay. And sir, your if you can share some insight on the spread, I mean, is it up till the the geopolitical situation? You think spread will be under stress? How do you see it, sir?
I think geopolitical is one part, because if it impacts the industries across the globe, which are the user of the chemical from domestic market, you will see the moderation in the overall margin, which I believe will be running between $150 to $250.
Okay, $150. Okay, and sir, you said something about inventory issues. So what was that, sir? At the beginning of the call.
No. I was just mentioning that the quantum of the sales which we have made for the last quarter was around 2,500 ton less, and we have some inventory lying over because of some logistic issue. Now it is sorted out, and then there is a free flow of the sales.
Okay, sir. Okay, got it. Thank you, sir.
Yeah.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Sir, when we had commissioned PA4, other than due to the operating leverage, for having used the latest technology, for the PA4 plant, so there was some 2 to 3% increase in the EBITDA margins. So when you commission PA5, can we expect same type of, I don't know, maybe 2% or 3% increase in the margin?
So that EBITDA margin is combination of your margin in Thelic plus the extra malic anhydride and benzoic acid you are generated, and third, the fixed cost is divided among 5 plants compared to 4 plants.
Correct.
This is the reason of the incremental EBITDA margin.
Sir, but also since you're using the latest technology, maybe the efficiency is better.
I think fixed
energy cost may be relatively less.
Yeah. Fixed cost will be divided in the 5 plants compared to 4 plants.
Correct. So can we expect, what is the minimum we can expect increase in the margins?
I think it will not be correct for me to talk about the margin. I can simply say that the payback period we expect is less than 4 years.
Okay, fair enough. So in the last call you had mentioned you are going for the installation of solar panels at the Taloja plant.
Yes.
So just wanted to know what is the investment for this project and what are the savings for the company have?
The project cost is around 2 to 3 crore rupees, and it has been installed. And that since the government has changed the policy, so whatever electricity we consume in terms of total unit, the unit which we are generating through the solar plant are deducted and balance is billed on IG. So there is a direct saving on the per unit of the electricity generated through solar at a commercial rate which is being supplied to IG.
Okay, so what could be the savings if you have to look in on an annual basis?
It will be between 50 lakh to a crore per year.
50 lakh to a crore.
Yeah, because we hardly use electricity. We generally use steam to power the plant.
I know. You had mentioned that in the earlier call.
But still, it is a good payback period is less than 3 years for that project.
Oh, okay. Very good. Okay. Sir, my next question is, if you could tell us what is the capacity utilization of PA in quarter 2?
The capacity utilization remains same, 89 to 91%, same.
So that means whatever the reduction in volume you had mentioned is purely because you could not dispatch. Other than that, there is no other,
It's only 2,000 tons. We were actually above 51. Sometimes you do 53, 54, sometimes 51. It keep on changing.
Okay, so from the regular 51,000, it had come down to 49,000.
No. It is above 50 only. Last quarter was 52, 54. Now it is around 50 plus. Because our run rate typically is 16,000 to 17,000 per month. That is the rate.
So 16 to 17 means, so it will be around 48 to 51, right?
Correct.
So that means in the Q2 we had done around 48 to 49.
Yes.
Okay, fair enough. Sir, do we have any...
Let me correct. Sorry, Q2 we have 50,000 plus.
Okay.
In Q1 we have 53. So there are gap between the Q1 to Q2. That's all. Around 2,000 tons. But having said that, our run rate is 16,000 to 16,500. So above 50, we are in the same range.
Okay. So now for the coming this Q3 or Q4, so you expect the same demand and you expect the same run rate to continue?
I think in terms of production, it will be around 16,000 per month. If we have decided to take any shutdown for change in catalyst, then you will see it will be around 45 to 47.
Sir, I'll put it other. I'm not asking from the demand perspective. What I'm production perspective. I'm asking from the demand. You are seeing the demand has not moderated.
Demand is generally there because India still import 8,000 tons per month.
Correct. But sir, compared to September, now we are in November. Is there any reduction in price of phthalic anhydride?
The phthalic price has gone down as low as 100. Now, right now, prevailing between 110 to 150. So it's a combination. When I'm saying phthalic price gone down off, it doesn't make any difference. Ultimately, how it is as compared to the raw material, that is material thing. So it has gone down in line with the OX prices. Now OX has gone up, phthalic has also gone up.
Okay, fair. Sir, did we have any inventory loss during Q2?
The last quarter? Yes, there was a small amount of inventory. I'm not directly calculating, but around 3 to 4 crore of the inventory one which has gone into the system.
Now that you are saying in Q3 the OX has gone up and
so it's not particularly about the pinpointing the inventory, but when you are buying a asset, say when buying OX at say 90 rupee, and you plan to sell at 105. And suddenly the 90 rupee inventory which you are carrying become 85, and then you need to sell at 100. So that 5 rupee adjustment you need to do it in your inventory value.
Correct, sir. I agree. So lastly, you had said that there is a reduction in the margin of malic anhydride. Any particular reason?
I think a lot of plants were shut down. They have come up in the market. Second is the logistic issues because of extraordinary, unprecedented rise in the malic anhydride prices from 110 to 250 to 300. That has corrected, I think, long back. Now it is moving between right now 90 to 110 rupees.
Okay. So now, assuming that the phthalic will not be much more any increase or decrease in price and malic price also moderated, can we expect around a run rate of 550 crores of revenues for till we commission the new project?
I think that is all depend upon the pricing. If the prices remain same, we expect 500 crore plus revenue. If prices go down, it will be lower. But I think it's all boil down to the final margin. Price doesn't make any difference. Even at 450 also you can make the EBITDA higher than 100 crores. So ultimately margin is better. The sales is only the number in terms of the total value and volume.
Okay, fair enough. Thank you very much and wish you all the best, sir.
Thank you.
Thank you. The next question is on the line of Pawan Nahar, an individual investor. Please go ahead.
Yeah, thank you again. See, what I noticed is that your debtor days have been going up consistently year after year, right? Which has led to lower conversion into operating cash flow of the profit. So if you can explain what is the new normal, or it'll.
So when we are exporting, we need to give 90 to 120 days credit. However, in domestic market, we are selling around 50 to 60% in cash or LC and balance 40 to 50% on open credit. So number of days debtors has gone up. We are aware of that because there are some recovery which is pending from some of the players which has been achieved now. We have started some facilities in our bank through which we can discount the bills of a particular party directly. We use that facility as and when we need cash. If we don't need cash, we don't discount it. So that's why you look debtors high. But I can discount that 30 crore rupee in one day. But we don't.
I understand. Discount is as good as borrowing. I understand.
So discount is as good as cash, but we decided not to do.
No, that's fine. That's good.
Yeah.
So my question still is, you said you need to give 90 days of credit for exports, right?
60 to 90 days. Yes. That is standard practice.
Sorry, and 60 in domestic or 50?
No. In domestic, we generally sell in cash.
Okay.
Some cases we give 30 to 60 days credit.
And how much is exports as a percentage of total for you?
12% for last quarter.
Then if half the domestic business is generally cash, only 10-12% is sold on 90 days. Your debtors are like 67 days as I...
No. I will repeat again. 50% of debtors are sold on cash where we get the money in 7 to 15 days.
But
balance,
of sales.
50% of debt is domestic sale. I'm talking about domestic sale.
Yeah.
Balance 20 to 30% is on LC and bill discounting, where whenever we need money, we can get it discount, and 20% is on open credit.
So what I'm again trying to repeat is, if you do that math, 67 days seems very, very high.
So because we have not discounted, that is what my point is.
What happens is, for 50 days, you are doing zero, right? No credit.
No, 10 to 15 days, because generally 7 days is the delivery period and 7 days is the recovery period.
Okay, and this recovery that you mentioned, how much is the amount, and has it come in Q2, which means...
All in time. The debtors which you have seen as on the September, it has been recovered because there was some pain in the pigment industry. So there was a delay. Now it has been recovered.
Okay.
Why we have not discounted? Because we have sufficient cash on the balance sheet. As on September, it is around 330 crore cash in the balance sheet.
That would be the net gross number. How much is the net number?
Net of that?
Yeah.
Just remove 116 from 336, around 220 crore.
220 crore. Yeah. Okay. Thank you. And the 67 will not come down, as per what is your understanding?
I think ideally is 60 to 62 days. 67 is on higher side, but I think from next quarter onwards, you will see 60 to 61 days.
Okay. And do you all get your raw materials on credit?
Yes.
Thank you.
Okay.
Thank you. The next question is on the line of Yogesh Tiwari from Arihant Capital Markets Limited. Please go ahead.
Hello.
Yeah.
Yes, I just had one question. So in the last conference call, there were some discussion about, we were looking at some land acquisition for a new plant. So any update on that? We were planning some facility.
Nothing. It's under process right now.
But we are moving in that direction, right? We are looking for a new facility out of the facility solution.
Right now, we have a 4 to 5 acre available adjoining to our existing facility. So that we will be utilizing first. And then for all future projects, we are looking for the land parcel. I think that is under evaluation. Once we finalize that, then we will be able to communicate.
And sir, that 4 to 5 acres which we have will be mostly for plasticizers?
So I have not commented which project is. That land is available. That is what my point is.
Okay, sure, sir. Yeah. Thank you very much.
Thank you.
Thank you. The next question is on the line of Aditya Ketan from SMIFS Institutional. Please go ahead.
So the PFI expansion, we have started commissioning onto our existing plant, right?
Correct.
So this 60 crore of CWIP which we are witnessing as on date on the balance sheet, so that
it's a PFI.
Capitalize some amount of that expansion?
No. WIP is reflecting the project in progress, which is for PFI. 60 crore is the money which has already been spent, and then LCs and others are open, which has not been reflected in financials. So 60 crore is purely for PFI project.
So this is for PFI. Okay.
Correct.
So apart from this, you mentioned to the last participant, you are having 4 to 5 acres of land available, which is excluding which we are doing expansion onto the PFI side.
Absolutely right.
Okay. And sir, onto the exports part, so considering if we move more towards the downstream derivatives, so will that be focused more on the exports part, and that would increase the export share in the total revenues?
So I think it all depends upon what type of products you are producing. If you are producing some, plasticizers, then domestic. If you are producing some polymers, then maybe 50-50. So it all depends upon the type of product. But generally, we keep the option of export and domestic open, and that is the reason we set up the plant nearby the port.
Okay. And demand for PAN, you have mentioned that, so that is quite healthy. But sir, when we are talking to other chemical companies, so they are stating that even the agrochemicals, the dyes and pigments, even to some extent pharmaceuticals are witnessing some sort of demand setback.
There are moderation in the demand because there are some challenges in the downstream industry, because there are some challenges in the European and that side. Whoever is supplying, like pigment is generally supplying to the China and the Europe. So there are challenges in that side. We have seen the moderation of demand in pigment segment. Paint is doing well. Plasticizers is doing fine. But pigment, there are some challenges. Anyway, there are multiple industries of supply. All industries can't perform well all the time.
Okay. So, sir, is there some news of any players into the Europe has taken permanent shutdown or closure of capacity?
I think the only thing we heard is that BASF has decided to put 50% of their capacity from Germany to China in view of the disruption in supply of gas. That's all. But there are challenges in Europe because the cost of the natural gas and electricity has gone 7 to 8 times. So it's not easy for them to operate.
So this can be an opportunity for us to supply more to Europe and capture the market share?
It is a two-way, because the opportunity is, if you can produce the product which is manufactured by Europe, India can be not only China plus one, but Europe plus one. You can set up the plant here and supply to the European counterpart. Mm-hmm. Having said that, if you are supplier to European industry, and if they are not operating, then you will be in some slight trouble. So it's a two-way. If you can set up, if you are supplier of raw material to the European one, then you will face the challenge. If you are supplying something which is consumed by European, then you are in a better position.
Okay, so we are supplying to Europe, sir?
We don't supply. We have our exposure to the Middle East. We are supplying 10 to 15%. All our exports in Middle East, not Europe. So, because we produce in the flex, which in powder, Europe consumes phthalic into the liquid.
Okay. Sure. Okay, sir. Got it.
Yeah.
Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
So with this, I would like to conclude the call. The only message I need to give is, just look at the phthalic and the type of industry. It's just beginning of the era of infrastructure built up in India. It's a long way to go, to highway, to bridge, to dam, to metros. A lot of infrastructure activities are expected to come up in next 20 years. We expect there may be a moderation maybe for 1 or 2 quarters. We expect phthalic demand to continue to grow next 15 to 20 years. Having seen the good polymers as well as the UPR, as well as the pigment, specialty chemicals, they all will do well in long run. In short term, there may be some hiccups, but on long run, the sustainable growth of India is directly linked, and phthalic demand is directly linked with that. With this, I thank you everyone else, and if you have any query, get in touch with SGA or directly send a mail to us. We are happy to respond to you. Thank you very much. Bye.
Thank you. Ladies and gentlemen, on behalf of IG Petrochemicals Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.